Well, hi everyone. I'm joined today by Nathan Sage, the founder and CEO of Sage Capital Management, a digital assets prime brokerage firm, but there's a lot more to it than that, which we'll find out about on this in this conversation. Every time I speak to somebody at Sage, there seems to be an awful lot going on, and it's changing almost week by week. So I just thought we'd get the latest from the founder himself, Nathan, and to understand what's going on in the firm. But before we do that, Nathan, would you mind giving our audience a little bit of background about you personally? Because I think you've got a very interesting story, which led up to the development of Sage Capital Management.
Yeah, sure. Thanks, Sam. Thanks for giving me the opportunity to talk about Sage Capital Management. My background, I mean, I've had quite a diverse background. I've been very entrepreneurial in my life. But really what got me into crypto is I was a global head of predictive intelligence for a large management consultancy firm. Prior to that, I ran my own businesses, and they acquired my business. Hence, that's why I became a partner. Predictive analytics allowed us to predict future markets, which works very, very well in fund management. From that, I went into fund management. I set up originally an FX fund as a regulated fund manager. But at the time, back in 2015, crypto was becoming more popular, and I got sucked into crypto. I'm quite a risk averse individual, and so going into crypto was something that I felt very uncomfortable doing. But as soon as you're in, it is just the most fascinating and collaborative kind of environment back in 2015. So my background was actually to create a fund to create algorithms to be able to trade the crypto markets. Back then, we focused on Bitcoin. And astonishingly, that fund grew to doing about 1 billion a day in Bitcoin. But back in 2016, that was significant. And why that's interesting is because we suffered an enormous amount of pain in the market. When you're trying to clear that kind of quantity of Bitcoin in a market that's fairly illiquid, and it certainly was in comparison to what it is
Absolutely, yeah.
today. Um, it came up with a lot of problems. It was massively expensive. I mean, we were paying $200 a Bitcoin, whereas these days you pay whatever 1 basis point kind of thing. It was hugely expensive. It was really hard to get good quality liquidity because a lot of the brokers in the market were fairly new to it. So from a tech perspective, we had failures. From the choice of liquidity providers, it was very difficult. And so back then, it was challenging. And actually, what in some ways became a problem is something that's now realistically created our company. Because the pain that we went through and the obstacles and the fragmentation that we got within that market meant that we had to change things. We had to do things differently. We had to take away the norm that had been created, and so it just can't be done this way. It has to be done a different way because it's too hard. And we had huge barriers. We had everybody telling us it's not possible. This isn't the way things are done. But actually, the difference is this wasn't traditional markets. This wasn't FX. This was crypto. And in some ways, it was actually okay to do new things and to challenge the norm and to be creative in what we did. So that's exactly what we did. And this is how we created what we've got today. And that was looking at what caused us pain and working out a way to fix it. So things like how do I get better liquidity? And how do I use the capabilities that we had as a fund? Because the nice thing is, as a fund, we had connected to multiple market makers. We decided to create our own private brokerage. So rather than using a normal brokerage, the only way we could do this was create our own private brokerage, was to invest in our own technology so that it became very reliable, to build direct relationships to all the market makers, which is fantastic nowadays because we're pretty much connected to everybody in the market, which is very unique. I think we are probably the number one company for connectivity across the market. But then when you have that broker and that connectivity, you then have problems with, okay, now I need to trade and I need to put money with each of these brokers, and that becomes really inefficient. So we had to fix that. How do we actually centralize capital so you can trade with multiple market makers, but not have your capital at risk, but also be in the position where you can optimize it so that you can use it to its full effect when you need to? How do we incorporate leverage? And so how do we lend or allow us to trade more than our simple capital to really make that efficient? How do we settle? with all these different providers, with all different systems. How do we integrate with each of them? Which sounds so simple, but it isn't, because it's a new way of doing business in some ways. Back then, every different market maker had a different connectivity, a different rule book of how you connect to them. So how do we fix that so we can actually do that in a way that it is centralized? And all these problems came up as a business, and as a fund trading that kind of quantity a day, it was massively expensive if we made a mistake. Fortunately, our clients were profitable, but equally, there were times where the market didn't favor us in something broke, or we couldn't get the price we wanted, or we got a quote that was way higher than the market, because that's how things were. And it costs a lot of money. But the good news is those learnings, and certainly when you lose money, it bites you pretty hard and makes you fix things pretty fast. We fix them. And so and that was what without intention, and it was more because it was client led, where people came to us and said, "Oh, well, could we use your liquidity expertise in crypto, because we have real expertise." The key thing is that we built a team of people around us. I mean, Chris, is 18 years at Bank of England. We built strong operations teams. We understood liquidity. So people came to us and said, "Okay, well, can we access your liquidity? Because it's better than anybody else's. It's deeper. It's cheaper. Can we access that? It's more reliable." And of course, the answer is, well, wasn't really our intent, but of course you can. And so that is how we started putting things together. Our focus was actually purely on, how do we take away pain? How do we make it easier for people to do business? And that was our focus. And we found that rather than saying, okay, how do we make as much money as we possibly can out of this? How do we widen the spread to make sure that in volatile times we pocket the cash? That's never been our intention, and that wasn't what our driving force was. Our driving force has always been, how do we make customers' lives easier? And now we're in a position where we have the markets offering, which is what you just described as the prime, where clients can come along, they get aggregated feeds, but it's across pretty much everybody in the market. So they don't have to onboard to every individual company. They don't have to put funds with every individual company. They centralize those funds. They onboard with us once. They don't have to integrate. They can integrate via API or fixed API, or they can use our GUI, which is a highly sophisticated trading GUI built by traders for traders, with portfolio margining and everything you would need. But also things like, you don't just get market access. We have something called elastic capital, which we found when we were trading, even though we would use a prime, that they would run out of money. Even with $1 billion balance sheet, they run out of money, which actually, that's hugely problematic. And particularly if you're running a fund, because you're relying on taking trades at certain times. And if the market moves, that could be your core profit for that month on that market move. But if you can't borrow because your prime's run out of money, then you've got a big issue. So we changed that. We said, okay, fine. Well, what we want to do is we want to, rather than have one balance sheet, which everyone relies on, what we're going to do is we're going to use technology to do what we call a smart balance sheet, or elastic capital, where we get 15 different major providers that all have balance sheet. I think our total balance sheet is nearing 15 billion on that. And what we're going to do is we're going to use smart contracts to match the trade against credit instantaneously, so in microseconds. So it means you're not going to run out of capital, basically. So if you want to trade, the market's volatile, you can trade, you've got your capital. So you've got your markets offering, you've got your capital offering, which means that you're now in a position where you can trade, you can optimize your capital, you're not taking risk because it's not on multi-venues, it's on one centralized regulated venue. And all this kind of insight brought us to the stage where again, we looked at other things in the market that caused pain, and we looked at what else can we do to improve them. And we got into, as I said, building a central management system that allows all the reporting, all of the different execution of trades, all the different products. And so we do spot, we do CFDs, you can access perps. But it's all to make someone's life easier, safer, cheaper, because we get aggregated. What we're good in, I told you about liquidity because we've been running funds. The nice thing about us is that we understand price skew, and so often our price is exceptionally well priced. And so you get all of these things in one place, which just makes it easy. And for companies that like in FX, we also found that some of them missed the boat getting into crypto, but I actually found it incredibly hard because it is a different knowledge set. You've got all these complications I just described. How do they get into market instantly? Well, that's the offering. The offering is connect to us once, and you're ready to go tomorrow with
You've got
everything you want. And
yeah,
so
you've
that's
got
how it works.
so you've got full market access. If you open an account with Sage Capital Management, you've got access to all of your connectivity, your prime brokerage relationships,
Correct.
and so it's a one-stop shop. And
Yeah.
what is the kind of average customer? I don't like to use the word average. Your standard customer that comes to you, is it another fund? Is it a broker? What sort of customers do you service?
Well, customers have different needs, and so you'll have customers that come to us for they will be a traditional FX broker. They will come to us because they want crypto liquidity. Um, Quite often they will have an internalization model, but with crypto, it's a very different beast to traditional assets, and so the risk profile can be very, very different. What they want is they want the ability to have market access even when others don't, and because we're the most connecting the market, we maintain market access even in times when others have gone down. We've maintained, and it's like like an insurance policy, I guess, for them to be able to manage that internalization quickly if they need to. But frankly, most of them, when they start working with us, because of the pricing and the reliability and the reporting across the different units within that business, they use us for liquidity because it's better than going to others. And so, brokers will use us for liquidity. But then you also have others. You'll have companies that will use us for on-off ramping. You'll have companies that are prop trading. You'll have family offices. Um, yeah, I mean, you'll have a variety of institutional clients. We only deal with institutional, regulated,
Yeah,
or professional clients. We don't deal with retail at all. And so it's the real kind of mix
yeah.
of client types we deal with.
And you've been at this since 2015,
Correct.
10
Yeah.
year, 10 years in the market. Obviously, you're kind of breaking new boundaries. How have you seen the market structure change? I mean, a lot of contacts I've had in the FX world have a lot of them are moving to digital assets, and that's getting more and more. I suppose I don't really like to say this gentleman approach to the market, or the kind of sophistication and the discipline from the FX world is coming over to crypto. Are you seeing that? Is it making a big impact? And somebody said it was the gentrification of the crypto world with all the FX experience moving in there. Is that fair to say?
I think the market's completely changed. I think if you look back at 2015, frankly, the market was driven by sentiment, very retail heavy. It's still retail heavy, actually, as in if you look at the percentage of ownership, it's still quite retail heavy, which is unusual, but that is changing. I mean, more institutions have come into the market, which means the market is maturing. It means that I was going to say you've got more stability. I mean, obviously, it's a very volatile market, but it's a very different market to what it was. I think back in 2015, there was lots of tricks that were being used in the market to manipulate. They've reduced massively. I think regulation has come in, which is great, and that has again removed a lot of the bad actors within this industry. And so, yes, it is becoming a lot more professional. As an asset, it's a more mature asset. I think
Yeah,
as time goes on, as it will with all kind of assets, they mature. You'll find that actually the retail ownership of this will reduce, institutional will increase. And also the market dynamics. As I said at the beginning, it was very sentiment based, and so the market would be based on that. And you'd have away from Bitcoin, you would have other coins which you could fire out information on Twitter or whatever it may be, create a frenzy, and people will buy the coin. And that's kind of how crypto was run. It was a very exciting, collaborative, place to be. Um, that's changed. I'm not saying it's not collaborative. I'm not saying it's not exciting, but it's changed from the point of view of how the market moves. I mean, the market now is much more led by what you expect in a traditional market. So, for example, the macro environment it significantly plays in the role of whether something's gonna go up or down. And so you can see the market is maturing. Yes.
yeah. And what's the concentration of activity, would you say? Is it still like the top five coins, Ethereum, Ripple, obviously Bitcoin, Ethereum, Ripple, Ethereum, that sort of thing, or is it spread out and diversified still, or is there a concentration back to the main coins?
Yeah, it's extremely heavy on Bitcoin and Ethereum, and so the coins you just mentioned are the top kind of coins that people would trade. But if you're looking at institutional clients, it's predominantly Bitcoin and Ethereum, and
Yeah,
obviously the predominant is Bitcoin. However, another key change that's happened in the market is stablecoins. And so if you look at actually, stablecoins are significant from a flow perspective. And what's interesting, if you look at our clients, and you touched on it earlier, what's interesting, you would expect our clients to be facing, or them facing, for example, other trading firms or whatever it may be. What we're finding is that's changing, and what we're finding is that they may be facing a wheat firm or a farmer or an oil producer, and actually what they're doing is it's the movement of stablecoin. That's the key thing. It's the efficiency of being able to on and off ramp that has seen massive growth. I
Are
mean,
you
that's
talking? Are you,
significant.
are you talking there about payments as a kind
Yeah,
of
exactly that.
as a payment method rather than a trading asset?
Exactly that. So if you look at the market from a trading perspective, you'd expect it to be heavily growing from a trading perspective. And clearly there is growth in that. And as I said, institutions come into the market, that is a growth market. It's still at the early stages and it's going to grow a lot more. But I think if you look at stablecoins have been uh, are much more interesting to the general corporate that doesn't necessarily, they're not a trading firm, they're not a fund, they're a corporate, and they supply goods into different countries around the world, and they need to pay for those goods. And I would say one of the biggest growth areas is the ability to use stablecoin to make those payments. And
Yeah.
so if you look at the clients that are coming on at the moment, a significant proportion of that business involves stablecoin and banking. So the ability to on and off ramp in multiple currencies, in multiple jurisdictions. And I think as an ecosystem within digital assets, that is a primary place for growth.
I
Because it's so
totally,
easy. I mean, I can pay somebody in 45 seconds in stablecoin pretty
yeah.
much anywhere in the world. And so it's super, super efficient.
I've got to be honest, that to me seems like the highest utility of digital assets is instant payments in relatively underserved regions like Africa. I'm having a lot of conversations with people in Africa that are facing those sort of payment problems, and the solution is, USDT or USDC or other stable coins. But Tether, I think, is still predominantly the stable coin of choice, although perhaps not so much in Europe. Is that right?
USDT, did you say?
USDT, yeah, Tether.
Yeah, it's yes, it's still very popular. I mean, USDC is very very popular. Yeah, I mean, USDT is probably the number one that
Yeah,
people require. I think if you look at, as you said, some of the African countries or whatever, it is a very popular, very efficient way to do settlement. It's still very expensive in those countries because of the infrastructure, but that's going to change. And so the efficiency of being able to pay, trade, uh, audit from the perspective you can see it on the blockchain moving from one to the other. It's super, super efficient and very, very compliant. And so uh, that is an area where we're seeing significant growth. And I think that is, if you were to say, in 10 years' time, and this isn't amazing news, as in people know this already, but in 10 years' time, the growth of stablecoins and the efficiency of stablecoins is going to be the absolute backbone of this crypto infrastructure.
yeah, I agree. But to a novice like me, why doesn't somebody in Africa pay somebody else in Europe in Bitcoin and they use Tether instead? What's the fundamental reason
Well,
for
I
that?
mean, paying with Bitcoin is you've got currency fluctuation. So Bitcoin obviously changes up, down, whereas a stable coin, by
It's at
very nature,
parity.
quite
Yeah,
stable, you would hope would be relatively stable. I mean, obviously USDT does fluctuate slightly, but it's a fairly common way of getting a neutral value between two parties. So the other thing as well is a stable coin you can move within seconds, whereas Bitcoin takes a little bit longer to move. So it's a much better way of doing it because it's on both parties. It's the same value when you transfer
yeah,
it.
yeah.
Um,
And this brings me on to the big development that you've had recently, which is the banking as a service
yeah,
product.
banking is so that's again when I talk about pain points, this was another pain point, and the fact is that people were finding it extremely hard, firstly to get banking. The second thing is that well, look, our own experience of getting banking is that what would happen is that firstly, it's hard to find somebody who will deal with you because you deal in crypto. When you find there are specialist banks that do that, and you find someone that does accept organizations that deal with crypto, it then was painful to be able to onboard with them. And not just painful, it took months. I mean,
Yeah.
6 months plus, often to be able to onboard with them. And through that process of pain, this is my personal thing is I used to do a lot of the onboarding with these banks, and you would do the onboarding, and you'd finally feel like I have done it. I've spent a whole day
Yeah.
doing this onboarding, and I mean a whole day of my time, and you actually feel good afterwards. And then the next day they come up with another 20 questions, and it just got me down with banking. But finally, you'd get through that stage where you do the all the questions. You've done your 6 months, and you finally opened the account, and they would obviously charge you for the privilege of opening that account. Then what happens when you start using the account, you'd get some really quite nasty fees, and volume-based fees, and everything was charged for, and it just felt unfair compared to a normal bank. But I do understand this is crypto, and therefore there's more risk, and therefore you may have a charge for that. But it felt a bit unfair then. But then what would happen is you'd get to the stage where you'd start doing transactions, and your transactions wouldn't turn up. So you get paid, wouldn't arrive, or you'd send money, it wouldn't arrive, and then you'd spend your time talking to the bank and the other bank, and you spend so much time trying to get transactions, and you got this ability where you never knew whether you're going to receive money or send money, and therefore it was one of those things that you had to have, but you really didn't want to do. You never ever wanted to use your banking if you can avoid it. Um, and then quite often they'd close your account. So after
Yeah.
about they'd close your account because not because of necessarily what you're doing with your account, is that them as a business, because they usually are a layer on top of something else, decide that actually they can make more money doing this, or they can do that, or they don't like the risk profile, and the account's closed, and you start again. And obviously, when you're trying to serve customers like we are, we're a high quality, high touch. We really, really understand our customers' business, and we give the highest level of service we possibly can. That absolutely destroys us. And so we it was a pain point. But these kind of my experiences were very similar to other people's experiences. So again, we wanted to change that. And so what we did is that first of all, we found a partner which we felt were very well positioned, had absolutely the right ethos, who had very, very good rails, so tier one rails, where some of the other banks, they're not tier one rails. I mean, we're talking, the proper major banks. They can do full international payments anywhere in the world, 140 currencies. We can have multi-currency accounts rather than having to pay for every single currency, which other banks do. It's no, you can have multi-currencies. And so what we did is we tested this bank for nearly a year using our own transactions just to see. And yeah, there's a few teething problems, but we felt very comfortable with the relationship that we had with them. But what we wanted to do is it was still missing something. It was missing something which had that kind of level of service that can translate the language of crypto natives or digital asset firms or any firm that's getting into crypto, and a bank that has a variety of different clients and could no way ever understand the nuances of individual client types. And so we wanted to do it so that we can actually act to that service, so we can in some ways translate between the two. And the reason we wanted to do this is because friction still existed. There's still friction. There's still delayed payments. There's still payments that don't go through. There's still questions being asked. And this all revolves around KYC. It all
Yeah.
revolves around compliance. And so this isn't the fact that the banker are deliberately trying to stop anything. It's because they have to. They don't necessarily explain it very well what they have to do. But obviously, from a client's perspective, they become very emotional because when money's involved and they can't see their money, you've got a very emotional state. So you've got a compliance-driven yes, no kind of this has to be done to an emotional client that just wants their money, and you get this huge clash, and eventually it fails. And that's what happens within this kind of environment. And so what we wanted to do is we wanted to put a layer on top where we offer what we call a private banking service, where we understand both parties. We as a business are regulated. We have our own compliance team. We understand compliance in multiple international jurisdictions, and therefore the conversations we can have can be very much on a yes, no, this is what's able, that's not able. And so it was very easy for us to be able to, let's say, translate the two. But also what we wanted to do is we wanted to create what we call stable flow. So it's the ability to create a predictable flow of in and out. And so if I make a payment, my client's going to receive it. If they make a payment to me, I'm going to receive it. If I want to pay in dollars and I want to pay a company in America, I know it's going to be there within 2 hours. And you need that ability so that you can get on with your business and it just works. And so that's what we did. And so that ability for us to use our expertise to understand the client, to understand their flow, to be able to make sure that the bank understands their flow, so we're not going to have any friction when they ask questions, but also to be the first line of support between the customer and having the ability to talk to the bank at a much higher level creates a fantastic service. It's a predictable, stable flow, frictionless experience where we've already got a relationship with the client. They trust us. When we open an account with us, although it's all branded with us and everything, their money doesn't sit with us as a company. Their money sits with the banking provider. Their contract is with the banking provider, and so it means that money is protected. It's safe. We don't have any access to it at all, but we can still act as that frontline support to make sure they get that frictionless service. And what's better than that is when I talk about fragmentation. You have your broker, you have your wallet, you have your on and off ramping, you have your bank. They're all fragmented. The difference is that it's no longer fragmented because anybody that is with us, if they want to convert USDT to USD, they're already connected. So the two are connected, and you can off ramp USDT to USD or pound or yen or whatever you want. Pretty much immediately because the rails are the same rails, and so it means that you become super efficient with the ability to trade, to optimize your capital, to borrow when you want to borrow, to make sure that you can make as much money as you can, to be able to get your money out, to convert it if you want to, and to be able to have it in the bank within seconds. And as those bank accounts are in the client's name and they're contracted with the payment bank, the payment provider, they can also make third-party payments. So it means they can receive money from their clients, they can pay out to the clients. We offer MasterCard, so it means that you can do all your expenses, you can look after your employees. It's a proper functioning bank account with ultimately the rails being with tier one banks. And so it meant we've now got this what we call the complete operating system, where you have fiat and banking to manage all your treasury side of the business. You have your market access, so full access to thousands of instruments. Although I said to you, Bitcoin, Ethereum are the top instruments. You can have anything you want because we're connected to everybody, and that could be through an exchange or a market maker or an OTC desk where you spot anything you want, and you have that instant connection that you can do at any time, whenever you want. As I said, you have the capital, but also if you don't want to connect via an API, you have this amazing, purpose-built GUI that has everything in it. You can see all your different instruments with a click. You have trading view charting included in there. You have specialist, smart algos to do TWAP and everything else within that. You can log into that and you can have multiple people log into a business. You can have your traders, you can have your back office. It does all your reporting for you, all your different parts of the business. It does all your TCA and everything within that one environment. So you've now got this complete operating system where you've got everything you need to be able to be involved in digital assets as seamlessly as any other market with it out there. And that's how it works.
Amazing. I mean, you've done so much in such a short amount of time. With that GUI, is it possible for a client of yours to white label that to their clients as well?
Yeah,
So
it's a really great conversation. Oh, sorry, great question. I mean, we designed it for us because we wanted there was every GUI that we went out to, or any system trading system we went out to. There's some really good ones out there, but they didn't quite do what we needed. So, for example, we wanted portfolio margining. So we wanted the ability, if you're holding Bitcoin, you can go long, short, you can trade any other asset class, and you use your Bitcoin as your
collateral.
portfolio.
Yep.
It works out instantly. But also bear in mind that what's becoming very popular is things like tokenized stocks and FX. Well, if you can portfolio and buy stocks, portfolio with Bitcoin on that system, that's amazing. Or if you want to go into a money a money fund with a large bank and you've got stablecoin or Bitcoin, we can convert that into dollars and you can still participate. So it's a really good way of doing it. But what we found is once we started showing to brokers, it was the number one question. They said, "This is absolutely amazing. Could we white label it?" And the simple answer is yes. We would. It has everything you need from the point of view of front end client GUI, which is it's a good looking GUI, but it actually allows you to do everything you need to do. But then it's also got the back end from a broker perspective to allow you to do what you need to do around managing lending or managing spread on your trades or instantaneous scheduling of XYZ, whatever you need to do, it's available. It can be white labeled. And so again, with each of our products, you could just have banking if that's what you wanted, or you could just have the ability to white label our technology relating to that. In fact, we've even got, and this is, I haven't actually mentioned this, but we've even got one thing that we're exceptionally good at is compliance. And we have got a new system called compliantid.com. And basically, that is a system that completely revolutionizes the way that we deal with compliance. Because what we find is with compliance is you have a compliance manager whose job is to make sure you follow the rules, and you've got a customer who frankly doesn't always understand the rules, but also doesn't necessarily gel from a conversational point with the two, and therefore you get this friction. We've developed a system that basically is fully conversational. It allows you to onboard in a normal human conversational way. It allows you to be able to, if you don't understand something, it will tell you about it. If your attitude or your tone changes, it will adapt to what you need. And it's all driven by a very, very sophisticated AI system that we now use for onboarding. And we use an AI system which is called Alex, which allows people to onboard and have this conversational. It's very, very smart and it understands what you're trying to do. And what we wanted to do is Alex is a system that advocates the client. So it's not there as a compliance manager to say no. It's actually as an advocate to guide the client through that process to make it as seamless and easy and as pleasant as it can be, but also making sure they've got all the information they need so they don't have to keep on coming back each time because a compliance manager is asking them different questions. And then when Alex is finished with that, it presents that to the compliance manager, and then we use another very sophisticated AI system to cross-reference that, so that when the compliance manager looks at the complete picture, they can see everything because it checks, the regulatory registers, it checks your company register, it checks your website, it checks adverse media, it does PEPs, sanctions, ID checks, it does travel rule checks, it does all the checks you need to do around transaction analysis, and it does it in one system. And the great thing about this is that onboarding that takes 2 or 3 months, because it is so complicated these days, you can do within a couple of days easily. If not, I think our fastest we got through there is an hour, which is unbelievable. So it's again just looking for pain points in the industry and saying, what can we do to just make it easier? What can we do to make that experience better? And fundamentally, this isn't just about people feeling good. This is about ultimately, how do I drive my business forward? And I drive that through by cutting cost and therefore making more money because I've cut costs, or giving them better liquidity with priority over those liquidity. So not only are they safe if the market goes dark at all, but also because of that better liquidity, they're going to make a better return on that because again, it's cheaper, it's better. They're getting clients on that are able to get on quickly. They've got technology that allows them to be a lot smarter with the way that they route that. They can optimize their capital. So again, rather than a 5x, we offer 10x. And so it's that ability. Plus they can on and off ramp. It just makes such a difference to the businesses out there. I think it's funny actually, we had a client that looked at it and what I find fascinating is a lot of clients will say, okay, well, I've got this provider and I've got this provider, and I've got this provider. And each of those providers costs money, and they're not even integrated very well, but each of them cost money. And so it's not just a hassle. They never really work out how much it actually costs. And we had a client that went away and they said that they could save probably in the region about 40% in OpEx costs across their business by using an integrated system like ours. But equally, they're finding that actually from the cost to trade, so the liquidity, they're finding it about 2 to 3 times cheaper than it is with any other provider because of the ability we've got with price skews. Because we've been in the industry so long, we understand that market makers they have different requirements for inventory at different times of the day. So we know at certain points of the day that certain market makers will be looking to offload inventory. Well, that provides a really lovely price skew. So it means that price is on the bid or the offer is better. And so if we take advantage, and it's not advantage from the point of view we're exploiting it, that's what the market maker wants to do. But
Yeah.
if we present that to our clients, it means that quite often, Bitcoin spread round trip, you're talking zero point 0.1 of a basis point all in. And so it's like, it's just a better experience for everybody. And
That's
so
a
that's
very,
what we are.
very interesting point. Is that a regular time each day, or is it you just know that that's going to happen? How have
Yeah,
you?
different market makers will do different things in different times of the day. And actually, it usually revolves around the different openings. So if you look at the different openings, I know crypto is 24/7, but you still have the US Open and you have the UK
Yeah.
and the Asian Open. What you'll find is that flows at different times of day related to fiat change. So, for example, in the European session, euros are quite a heavy currency. When it moves to the American session, dollars are a heavy currency. And so it's very clear at different times of the day, it's better doing different swaps, and you get different preferences over different coins, et cetera, et cetera. And so now trying to do that manually is near impossible. But when you've got a system that recognizes that and that's been pre-programmed to allow that flow to be presented to our clients, it becomes very, very effective. Um,
So is that kind of like an advisory service on top of what you're doing, would you say? Rather than
no, no,
just
we don't provide we don't really provide any. We don't provide any. We look after our clients exceptionally well, and so they
right.
get information because we're connected to the industry in a way that does significantly help them grow their business. And we do help them optimize their liquidity, and we help them optimize their price, and we help them do all the kind of things that they feel they should know but don't necessarily know. And it's this funny one because I think a lot of people that come in this business, particularly FX brokers, who are extremely experienced at what they do, very, very talented people. They've got exceptional businesses in what they do. And I think a lot of them come into crypto feeling that they should know everything about crypto. Uh, and and they don't necessarily, but why would you? And it's those that come into this industry that we show them how to tweak certain things to allow their business to run even more efficiently. And within this market, you've still got abnormal profit. So there's still opportunities in here where if you get an FX broker that really understands this market and get into it and can utilize the availability, you're still in a position where they can make very, very good money because, as I described at the beginning, this isn't a fully mature market yet. And so those little pieces of insight, and as I said to you, we've got an exceptional team. We've taken on we've taken off the former CEO of BitMEX. We got people that worked in the Bank of England. We've got myself who comes from predictive markets, fund management, investment management. We've got all these things in one place. Plus, we talk to so many people. We're in a very good place to provide intelligence, let's say, for our clients. But we
Yeah.
don't do it as a paid service. It's part
Right.
of
Yeah. Yeah. Just part of the making their business more efficient, which helps you retain the customer, and
exactly
hopefully
that.
the volume that comes from them will improve.
Exactly that.
I just want to go back to a point that we were touching on earlier about the vagaries of being onboarded by a bank if you're a digital asset firm, and this whole, I mean, I've understood this as well. So you go through a very, very laborious onboarding process only to find it in a few weeks or months. You never know when it might happen. You might get closed down for whatever reason. Somebody's taken within that business to offboard you. How can somebody feel more secure that's not going to happen with you then? Because you understand the industry more, your KYC and your compliance is much more thorough. How is it that
I,
you're
I
able
I think
to?
I think that's exactly it. I think the upfront questioning and the making sure that understanding and frankly also saying no. And so yeah, we do get a lot of people that come to us that obviously have a need for banking, but frankly, they're not going to get a bank account. They may be a business that is providing trading services to customers that are unregulated. Well, you need to be regulated to provide
Yeah,
services to customers. And so, what we tend to do is we very, very quickly say no. And so that's the first thing. Within one conversation, we will tell you whether you've got any chance or not. And frankly, if you're in a position where you are a business that is regulated, or you're running a business, or you're running an operational account, or whatever it may be, and it's done for, and we can understand that business, then we're gonna understand more and take you through to the next stage. And so the first thing we do is we don't dangle a carrot and pull you along and just hope for the best. We
yeah,
say no. and we say no immediately. But if the answer is, look, this looks interesting, it's then the part where we do some really you know deep questioning to try and understand that business. It's not personal. It's not something that you wouldn't usually do. It's just the right questions to understand that business. And through that understanding, we are then in a position where we can feel comfortable to present that to the bank. And we know that when we present that to the bank, that that they have a high chance of being being successful. I think if you look at average times, I mean, for a standard onboarding, you're probably talking for a bank is maybe a week. For a more extensive, where we have to do more extended due diligence, 2 weeks to a month. And so in comparison to others, that's very, very fast. The nice thing about it is that when you go through that process, you only have to do it once, which means that once you do that, you can also use all our other services. And so you can use banking and everything. You don't have to apply twice to one to trade with us and then one to use our banking services. It's done very, very quickly. And so if you want to use banking, if you want to trade, if you want to use yield, whatever you want to use, you can use from that one onboarding. Even to the stage actually where that onboarding gives you a score that's recognized by others. And so sometimes people actually use our onboarding to use that to go and on board with somebody else, because the quality of the compliance we do is such a high standard that we will provide them their file, let's call it. So similar, like you used to get a credit rating. It's the same. It's a compliance rating, which goes across a multiple of different standards that we use in a regulated environment, that they will use as their score to be able to onboard with third parties like wallet providers or whatever it may be. So yeah, it works.
Okay, very interesting. Is it fair to say that the clients you might get might actually not be trading digital assets other than using stablecoins for payments? Is that
Correct?
something
Yeah.
you're experiencing
They
now?
use it. Some of them will use it as a treasury function. So we use the banking as a treasury function that allows them to do that. They then we use digital assets to make payments because it's super efficient and fast. And so that's exactly what they might do. But equally, they may say, actually, as a treasury function, we believe that we're going to hold a percentage of our treasury in digital assets. And they will use that, and then they can get a yield on that. So it means that they can hold the digital assets, they put it into our and secure environment, which is insured, and they get a return, a yield on that as well. So it becomes very, very effective. And the day they say, well, actually, I want to move out of the market, it's instantaneous. It's not that we have to then go and sell the assets. We can obviously clear any form of assets within milliseconds. And so, they feel that is a way of managing risk very, very well as a treasury. Or they will use it for payments. And so again, they will use the ability to receive and send payments in digital or do the conversion.
Okay. Well, what are the other projects you have on the go at the moment? What other frictions are you going to deal with
Well, I
in the
think we've done a
market?
pretty good job, to be honest. So, I mean, as in
What else is there?
it's a pretty good job. I mean, I think again, stablecoins, I think is an area that will well, not will, is increasing massively. And although the ability to move money around on stablecoins is very, very fast and very efficient, when it links into fiat, that obviously is less efficient. I've described a way where people can connect through our banking to receive a stablecoin payment, and then we can pay them instantly into their account, even if they're in Australia within a second. So that's very, very efficient. Where that falls down, though, is when you have, for example, we spoke about Africa, where you have clients that want to do on and off ramping, where they're allowed to do on and off ramping in certain African countries or other countries around the world. What you really need is you need a local bank. And so that ability to be able to send stablecoin from one to the other, have a local bank converting, and that completes the system from the perspective of efficiency, of control, etc., etc. And so that's an area that we probably will look into more on how we develop that local banking ability to do on and off ramping in locally. But I think the core thing is that we are at the cusp of this market still significantly growing. We have, and I think we're the only company actually that have this complete operating system to provide ultimate efficiency, cost savings, and help the businesses grow from a profitability perspective. Frankly, we're now ready to leverage that. And that's what we're focusing on. So we're focusing on taking on clients We're focusing on helping them use that system to fully get the max they can from that system. And that is our core focus is we have this amazing product set. Let clients experience them. Let's let clients use it. Let's learn from those interactions and then build on that. But if you look at the pain that we suffered when we came into that market, we've solved that, and in a very, very efficient way at a multitude cheaper than what we used to pay, and yet all these additional safety and efficiency within that. I mean, I would say without doubt, the fragmentation that everybody's still used to, we have got rid of, and the friction we have got rid of. And so, for anyone coming into this market that wants to trade, without doubt, we're the natural choice to do this. And we're regulated in multiple jurisdictions.
Yeah, that's great. Congratulations. A lot of hard work's gone into
Thank
this.
you.
Where can people meet you over the next few months, or your team?
But the team, I mean, frankly, we're very active on things like LinkedIn and whatever. And we have our website, www.sagecapital.co.uk, where people can look at our information. We do go to events, and so we publicise on LinkedIn which events we're at.
Yep.
But yeah, more than welcome to reach out in any way that people would like to reach out and happy to have a more detailed conversation.
Or LiquidityFinder, obviously.
Well,
Yeah.
frankly, I mean, anyone can LiquidityFinder. We are very prominent on LiquidityFinder.
Yeah.
So yes, and
So if just a shout out to the audience, then if you want to get hold of Nathan or Chris or Jason or other people in the team, you can find them on the members directory of LiquidityFinder. Drop them a message, go straight to them, and I'm sure you'll have a very interesting conversation if you were to do that. So Nathan, thanks a lot for your time.
yeah, thanks, Sam. I
And
really
you've
appreciate it. I
given me a really
appreciate
good
what
update.
LiquidityFinder's done for us. So yeah, thank you for that. And
Yeah.
yeah, appreciate it.
See you soon.
Thanks, and bye.
Bye bye.